Morning everybody, it's Chris from Serene Education with the 4 majors and this update for the 2nd of April 2012. Happy April Fool for yesterday. Euro against US dollars are going to be the first of my 4 majors this morning. Always look at I'd like to see what's been happening over the past, well, how last week actually fared and where it closed in the whole aspect of things. So we know 13,300, very strong support and resistance level previously, and you'll notice that last week it closed higher than that, and in doing so trading above the 20-period moving average, which happened to be prior resistance for a number of weeks. So what we have is two parts of our strategy CTC now in favor. We have our blue arrow and our blue candle. However, the CTC on either side here is still very much in a negative downtrend. You can quite clearly see we have a major low, price swing low here in October of last year, and we had one just recently in February. So we've still got to break above these ones, and in doing so we'll see the other parts starting to fit in. Institution 50 and the 50 and 200 have crossed just recently, which is not a really good sign. Ideally you want to see both these time frames below price, but as it stands now, the only one that's actually been breached recently is the 20-period moving average, and it's crossed over a major support and resistance level at the 13,300 mark. I'll just go to a daily just to show you that. A lot of hesitation around this area on a daily. I've marked it in black. You can quite clearly see that 13,300 through most of February, again through early March. A lot of prior resistance and a breakout and a pullback over the past couple days. The last week going into April, you can quite clearly see a breakout, a pullback. A number of indecision candles here, doji followed by a spinning top on 1300, which happened to be prior resistance, becoming a new support. We wanted to see a bullish candle, and we got it on Friday. However, not a really convincing one, because a pullback from those highs that we saw during the course of the day. Close of the US session, we saw price pulling back, and that happened to be closing lower than the previous breakout area. So ideally, if this is going to maintain the upside, then obviously we want to see another bullish candle to the upside, breaking above the prior highs that we saw the part of what we see. That was Thursday, Wednesday, Tuesday of last week. So if price can edge up higher than 13,400, then we definitely are in the genuine sentiment is looking favorable upside, and roughly 1348ish would be our port of call for the remainder of this week. As we hedge higher, you can see higher swing. So swings to the upside dictates trend, and 20 and 50 are below price and evenly spaced out, which is great. The only one that isn't is the institution moving average, because we know on a weekly that we're still in a negative downtrend. Get above these areas here and above the institution moving average of 1360, we should be looking at it. We're being in calmer waters as such, primarily because if we're trading above an institution moving average, then we are pretty much in a bullish scenario setup, especially on a daily. If you are trading above an institution moving average, it definitely bodes for further upside sentiment. You can see quite clearly we've been trading in a negative one since September last year, and you can see the movement that we've seen to the downside ever since we've been maintaining this scenario below the institution moving average. So if we get above the institution moving average on our daily, above 13,600, then it looks potentially great for onwards. Things out of Europe that are probably going to be a thorn in the side is Spain at the moment now. A lot of cuts have been made by the government. 27 billion euros apparently of cuts by the government to try and stem its issues. We've gone from Portugal now to Greece, and then now Spain is raising its head. It's just one issue after another. It doesn't seem to go away. Throw a lot of money at one problem, and then something else comes up and says, hey, listen, we're next in line. So we're not out the woods yet by any short measure. Anybody who thinks that we are is kidding themselves. Euro is made up of a lot of countries, not one, and a lot of countries are hemorrhaging quite badly. So factor that. We are trading. If you look at the overall trend on a weekly, you can see lower swings. We are as it stands now trading above this little trend, this downtrend. If you just take the highs here, for example, swing low, swing low, swing low. So this movement, price trading above the 20-period moving average, is fantastic, but it's not all that very convincing. As you can quite clearly see, this movement up here is very, very small, not a hell of a lot of movement. You want to see positive movement, big candle showing definite conviction. Not so. Heading above the 13,300, so not a very bullish upside move. If we're looking for positive sentiment, they're saying yeah we are definitely favoring euros, looking great, everything's going according to plan, blah blah blah. Doesn't really look like that in the candle setup, so I'd still be tentative. As long as we remain below 13,600, I think overall we're still very much in choppy waters. So keep that in mind. The great thing about it is we're still trading above the 1300, which happened to be a very strong prior resistance before. So the longer we can stay above 13,300, the more likely is we're still going to see that price edging higher. If it's tentative, great, but it'll still edge up higher nonetheless, and you could at least see price heading toward that 13,500 mark before we see 1,600 being the overall target as we head into the institution moving average on our daily. So break above 13,400 today or soon would just clearly indicate that upside is still favorable for this pair, and you can see on the actual strategy template here, everything's in our favor for higher swings or price looking bullish. Ideally, if anything, got to see a break above this price swing here at just below the 13,400 mark, and we should see price climbing. The 4 hour, you can quite clearly see that 13,300 here in red, very much more happening above it than below it, and you can see for the first time all the moving averages and the CTCs in our favor. Blue across the border, yes, we have a lot of red in between arrows, but shorting against the overall upside trend, swing highs dictating that we should see, it does derive that we're seeing positive sentiment in this. However, on the 4 hours, you can quite clearly see here at 13,400-ish, we start getting a lot of wicks. Body candles very much in tune with each other, roughly around the 13,600. If you're just going for the bodies, a lot of wicks. If you want to take the wicks, you can see quite a lot. There's a lot of wicks here at 13,380. So not a lot of positive sentiment. We are trading above a major resistance, but the sentiment to push higher just doesn't seem to be there, and that's what you want to see. Okay, so we've broken a major resistance. Okay, so great. Where's this movement? I want to see positiveness. It must have been positive in order for it to get above this very strong resistance level at 13,300. Once it's done it, it's pulled back, and then we saw it move below the actual prior resistance again, which was it happened a bit of support for a while, but then we saw this bearish candle. So the sentiment is not really there. It back up again, but it's not moving. Like, come on, you've been stuck below this 13,300 for so long. And now you've been edging higher, so the sentiment's been there, but you've crossed that level and it's just gone flat. So what is it telling you? Well, it's a mixed reaction signal to me. If you ask me, I don't see it as a very great signal, because you're seeing a lot of wicks, a lot of indecision. The moment you see a lot of wicks at prior resistance or support, tells you there's a lot of indecision sentiment in that actual trading range, and if you want to see positive sentiment, then you want to see a nice bull candle with as little wick as possible, like that, for example. A lot of decision. It's a decision candle. This is indecision. These are indecision candles. It's the same for bearish. Then you want to see a nice bearish candle, less wick, the better. I'm telling you this year, I'm negative. I don't see anything other than negativity, and it's bearish. I'm not getting that after this breakout. It's just sideways. It's not doing anything. Very indecisive. So not a very convincing breakout, and I don't think there's really any positive sentiment in that. So I wouldn't be surprised if we see price falling over soon. So it'll be a red test of 13,300. We've got to see a break of that. It's got to maintain above 13,300. The moment we get below 13,300 again, it just shows you that sentiment is very indecisive, and we should see potential trades lower. Look for support and resistance levels to the downside if that's the case. And you can see here at 61.8, just below here at 13,300. Then we've got 50, 38.2, 23, and way down here to price support and resistance at the 100, back to 1300. So just be aware of that. Now, hourly chart tells you a hell of a lot about what's happening. 13,300, told you we were trading above it at major resistance before. Now you wanted to see price moving higher. Okay, breakout, get the pullback. That happens in 90% of the breakouts you see these days. Breakout, pullback. If it's a strong pullback, then it doesn't even get to 23, or it might even touch 23, and then you'll see price moving higher. The less convincing the breakout, then you see a bigger pullback. Gets down to 38.2, 50, 61.8. Gets to 61.8 is well pulled. It's pulled back so much that the sentiment, the real initial breakout sentiment, wasn't all that great. So if it gets to 61.8, yes, it's still going to move higher or lower depending on which way the breakouts happen. but it's not a very convincing one. Here you can quite clearly see a breakout, and then we've had pullbacks, and these 23s and 38s, etc. have all been breached on the first initial pullback. Then we've seen price bouncing higher on the institution moving average, and you can notice that RSI, relative strength, just it relates to price action over a certain number of days. In this case, you can quite clearly see that over this period of time, through the latter part of March, you can see that the RSI, there was more happening above the 50, which happened to be positive, and sure enough, you've seen price moving higher. 1 or 2 dips below the 50, but still maintaining itself above the institution moving average, so still sentiment is still favoring upside. Notice, however, as we've been reattempting the prior highs here, so the initial first high, second, third, fourth high, notice RSI has been dipping. Okay, if you reattempting these highs over here, the first initial one, then the second one, you want to see RSI trading roughly around the same height on the RSI as the initial one. So here you can see our first high, RSI was here. So great, that's going to be our measure. So if we see a second attempt, then that sentiment should be positive or thereabouts as the first initial attempt. So you want to see relative strength as close to that high as possible. Not even a chance. Very, very low. Here I didn't even get there. Second one, attempt, same high as this, even in fact higher. But look at this high on the RSI compared to the previous one. Still lower. And the same here. So sentiment is not really driving this at the moment. Now, we've broken higher, but that sentiment, it just ain't there. We want to see RSI trading higher than the previous attempt to tell us that sentiment is there. It's sentiment's bullish. Go with it. Here, I'm not getting it. Yes, it's about 50, so it's still bullish trend upside. But in terms of, is it a positive upside trend at the moment now? Not very convincing. And that's pretty much playing out at the moment. So, for me, got to see things trading well above 1338 or 13400. Definitely give me that signal. Otherwise, I'm standing aside and looking further or bearish consolidative at the moment. On to sterling. Let's have a look at the sterling weekly chart. Let's have a look at sterling. Okay, very, very interesting now. You quite clearly see as price has been edging sideways since 2009. You can see bouncing higher after this large sell-off in the market, the initial bearishness in the market that we saw in 2008, pretty much panning out, and then the bottom, at the start of 2009, we had this nice support, and then price been edging higher, then falling over, hedging higher, and then, but nonetheless, not falling any lower. Moving sideways, yes, consolidating under the institution moving average. And for the first time, we've seen price now actually attempting to break the institution moving average right here on the hard right edge. Price has been moving higher through most part of this year, through January, slight pullback, and then second extension to the upside. And now as we speak, last week, a nice bullish upside candle, testing, not closing higher than the institution moving average, breaking higher than the 50 period moving average. And now for the first time, you can see that's the start of this week. Last night, Asian session opened and slightly and opening higher than the institution moving average, which is a great sign, because now for the first time since, let's move right back, since mid 2008. You see how the institution moving average came through here, just through mid part of 2008. Let me see if I can get this week over here. Let's have a look here. There we go. What was it, October? Late October of 2008 was the last time the institution moving average was trading, well, when price was trading, even before that, apologies, was the 23rd of 2008. So August of 2008 was the last time price was actually trading above the institution, and for the first time this year, 4 years later, we're trading above it. Well, we're attempting to trade above it. First time that we're actually sitting here testing it, which is a good sign. It's a bullish sign. It's got to be a bullish sign. First time price actually trading above all the moving average on a weekly, and the CTC has been blue for a number of weeks now. In fact, a couple of months. Are we going to see price really moving higher now on that? So what we're going to see now for the remainder of this week is obviously price maintaining this momentum. A nice bullish upside candle after resistance for a long period of time through the 5900 area. We saw last week breaking higher than 5900 after we found it, eventually finding support, and hedging higher than 1600 for the first time. In doing so, now you can see prices trading above all these areas now. Not out of the woods yet. Ideally, we like to see our bull trend move, the bull candle moving higher than that would definitely confirm that sentiment is still higher, and by doing so, we'll get a higher swing. As you can see, higher swings depicts upside or trend direction is bullish. So weekly looking good. We'll move to our daily time frame to see this breakdown on our small time frames. You can see 5900 for a long period of time through February. A lot of resistance under the institution moving average, a breakout which failed to really materialize. After the breakout, we had a bearish engulfing that took it back, moved to the underside, failed to maintain those highs, we saw a sell off, testing 15700 etc. to the downside, and then we had another bounce, and found ourselves back up and retesting the institution. In doing so, a nice bullish candle breakout, a pullback, a nice support being found now above the prior resistance level here, the institution at 158500, and we saw Thursday's candle bullish engulfing on a support, and Friday moving higher. In doing so, now trading above 1600. So psychologically, a lot of people were thinking, well, great, we're above 1600, let's take us higher. And sure enough, the sentiment over the Asian session last night, low to start with, but as we've gone into the European session open this morning, we've seen price moving, edging higher, which is great. So now we want to see price spending more time above 1600, and doing so will be telling us that that sentiment is now looking positive long term. Weekly, we've seen break above it, and that's what we want to see for the remainder of this week. We want to see price trading no lower than 1600 and spending more time above 1600. You might find that price might pull back and trade below it. As long as it closes and we see more wick or body action above 1600, then psychologically that's looking favorable for further upside movement. So blue across the board, yeah, all the moving edge below price on our daily, fantastic signal for further upside. Moving to our 4-hour chart, you can see that 5900, very strong price resistance. We saw the breakout, a pullback, it pulled back lower than the actual support, eventually finding that support, still trading above the institution moving average, guys. Okay, even though we saw the break below, still trading above the institution moving average. Hence the CTC is still in our favor. And then we saw a bang, further upside. A couple of hours through Thursday and Friday, very indecisive as we headed into the 1600. A lot of wicks. We closed negative on Friday at 1600. However, this morning on the Asian session or the European session open, we see a lot of buying going into now. But we want to see a genuine bullish upside candle on the 4-hour. We've seen an indecision before then, spinning tops, bearish engulfing, all at 1600. We don't want to be buying into bullish sentiment if it's or buying into sentiment to the upside if it's not genuinely bullish. So I'd rather give these candles, give the 4-hour and the hourly back to the market as we play with the 1600. We want to see price moving away from 1600. The quicker it moves away from 1600 to the upside, it's telling you that that sentiment is genuine. Nice bullish engulfing, a lot of little wick as possible. You can see a lot of wicks here, very indecisive as you're testing the 1600. We're going to see nice bullish candles. Excuse me. So the further away we get away from it, the less likely we're going to ever test it again anytime shortly, and we can buy into that with positive sentiment. The hourly, you can see I use the hourly just to gauge where relative strength is genuine sentiment to the upside. Notice the institution moving average here, price trading more above the institution than below, so it tells you that sentiment is high. We know 5900 was a very strong resistance. Look at that, a lot of resistance in the breakout, a pullback, and eventually it bounced higher. And by doing so, trading above 5900, so psychologically people were still looking to purchase this to the upside. Sure enough, we did get it, and it moved quite swiftly to 1600. Now we're at 1600. You can see price just trading sideways now. Sentiment being quite consolidative. And if I zoom in, you can see the 1600 price trading back and forth between 1600 and below, backwards and forth. Not very decisive. We want to see a decision. It's got to be decisive because you can see it's kind of capped by this little box pattern going backwards and forwards, backwards and forwards, backwards and forwards. Now we don't want to be stuck in this. We don't want to be trading. Okay, great. It looks like it's going to be bearish. Let's go low. It looks quite bullish. Let's go high. As long as it maintains more, if it spends more time above 1600, then it's more looking long-term bullish. As long as it trades above the 50% line here, then it's still positive sentiment to the upside. And sure enough, you can see that. However, as we've attempted these areas above 1600, these highs here, notice that the RSI is being trading lower. So sentiment-wise, not really positive as we've broken these highs. However, we've got to still see it as bullish consolidative this as price is trading above, quite strongly above the 50% line, so it's positive. Okay, as long as it remains above 50, it's positive, and as long as it's trading above the 1600, which is a strong resistance level before, psychological resistance level, and all the moving averages below price, then it's still positive sentiment. So look for positive. As long as it remains above 1600, then we should be still looking for positive sentiment to the upside. Swiftly into the US dollar Swiss franc. Let's have a look at the weekly quickly, and you can quite clearly see that price is moving lower from these highs we saw back in late December, January. Swing low, pretty much not trading any higher after these pullbacks, and an evening star here at a prior resistance level. There's a resistance as price moved lower. In the distortion candle at that resistance level, and we've seen price over the past couple of weeks just moving tentatively lower to price support here just above the 8900 mark, 8950, and sure enough 20 period is above price, and so is the institution, but the 50 period moving average is still below there at 8800 or so. So clearly moving to the downside. The daily chart, really you can just see that these highs swing low, another swing low as Friday's close swung lower than the previous one, forming a downside trend. So as it stands now, you can see market sentiment is looking negative for the US dollar Swiss franc, and it's been trading for the first time. There's more price action below a price support. Yeah, 61.8. Notice support. Price for almost a week fell to trading lower than this area here, just above the 90. What would it be? 91, 90.02 area. Yeah, 90.20 mark, and now for the first time you're seeing daily trading below that. So psychologically that's looking negative. CTC above us, red, everything is red. All the moving averages bar the institution moving average down here at the 88.50 mark is still below. So as it stands now, the longer it spends below this price support here, the more likely is we can see extension down now to 89.50 long term. For our chart, see that area here at 90.20, as I mentioned, a lot of hesitation now, and then a lot of indecision. Spinning tops, major spinning tops here. A break lower, but a bullish up, trying to maintain these highs. Swing lows, you can see the price trading lower. Swing low, trading below all the moving averages, including the most important ones, the institution. As long as it maintains below the institution moving average, then it's negative sentiment. So got to see a bearish candle breaking below this support area. A lot of wicks. We don't want to be caught in all these wicks. Okay, but you can govern that roughly around the 90.20 mark. You can see that price is definitely finding support. So what we're seeing is a bearish engulfing at this level here. So on a 4-hour chart or an hourly chart, we want to see a nice bearish candle, and then look at the entry at the low of that candle plus the spread, not the body wick, the actual candle wick low of that. So very, very important. Got to see negative sentiment now. We don't want to see indecision here. A lot of indecision. You don't want to be caught into all this, otherwise you won't be making any money. You'll just be trading sideways, losing time and not making any profits at all. So want to see a nice bearish candle here to confirm that. CTC is very much red in our favor, and so all we're looking now is for a nice negative sentiment candle, like a nice bearish engulfing here at this level to definitely drag price lower. The hourly, quite clearly, as we trade into this 90.20, relative strength has started to give back to the market. You see a lot more buying sentiment here as we head into the support, because there's a psychological support here, because price is spending a lot of time trading at this level. Number of full week price just moving sideways at this level tells you, and then the RSI, you can see a lot of indecision. Still trading below the 50 though, and as long as price is below 50, then the sentiment is still looking negative. And just recently a lot of indecision at this level here at 90.20. Got to see a nice bearish engulfing to the downside. Put your stop here above 904, 904.45, something around there, and look for further sentiment to the downside. Lower swings, as I mentioned, dictating price action to the downside. Clearly the institution moving average above price. Everything's looking favorable for negativity. We just need a nice bearish engulfing here to confirm that it's true sentiment. As long as RSI trades below 50, we're still looking negative for this pair. Last pair of the day is US dollar Japanese yen. Let's have a look at the weekly. You can see a lot of upside movement since February. Really moving higher, but 8400 being the major resistance level now. Stop port for this pair. Went trading into it, price pulled back. Then we saw another week of hesitation at this level. Third week of hesitation, and the start of this week very indecisive as it stands at 84. So clearly, if this is going to move any higher, then we want to see 8400 being breached and price trading above. Otherwise, we're going to see a further consolidation and price moving between the 82 and the 8400 mark. Two parts of our CTC rule are in favor. We have a blue arrow and blue candle. However, with the CTC on either side is still negative because we are still remaining in a negative downside trend. Yes, we have a break of this major downside. However, the institution moving average is still above price. Okay, so sentiment for weekly is still positive short term, but still negative overall in the great scheme of things. The daily setup, you can quite clearly see that the 8400 here marked in black has been price has moved back since those, and then we've seen a bounce on the 8200 moving higher but not breaking the prior support levels here at 23.6, and now spending more time below the 23.6, which is not a positive sign. You can see the candle, as you see now on the Asian session, trading those highs, tempting 22.6. However, we're seeing more price action at the bottom end of the wick, telling you that there's more negative sentiment than positive sentiment. So if anything, it looks like we could see potentially this area here, this price support roughly on the 82.30-40 mark, being pretty much an opportunity to the downside again as anything stands. Consolidating bullish because we're in an upside trend. CTC is showing us that all the moving averages below price, so everything is looking positive upside. However, 8400 is our major resistance level, and the support we have here is coming roughly around the 8230. So as long as it maintains above 8230, then we're looking still favorable, bullish, consolidative. However, the longer it takes to break above these prior ones in order to test the 84, then we're going to see bearish sentiment creeping in. So we can see price pretty much going sideways in this consolidative range, and it'll still be a positive consolidative range because we're making higher highs. As we move sideways, the institution moving average starts to come into play. Are we going to see price moving higher? As price moves sideways, eventually the institution moving average will catch up with price. Will it make it? Will we see price actually moving higher because of that? We'll get a nice clear bounce on the institution moving average and move higher towards 8400 and greater. As it stands now, at 23.6, price is trading above here at the 8220 mark, and as long as it remains above that, then the sentiment is still negative. We're just seeing consolidation in this upside trend. Okay, so as long as it maintains above the institution, above the 8220, then price is still looking for positive, favorable upside. Notice, however, we've seen a lower swing from these prior highs here. These prior highs attempts at 8400. Got to be breaking above that to look considerable bullish. We have two parts of our strategy, or three parts, four parts in fact. Everything's looking positive for upside. However, we have the psychological resistance here, the 23.6 here on the shorter time frame. Here the support level here at 80. What's that? The 83.30 mark as a clear ceiling level. Failure to do a break above that quite soon will just confirm that we're looking for sentiment to be bearish again and take us back to 8220 in the foreseeable future. So very, very important that we see price break that. And the sooner we get a break of that, then the sooner we're going to test 8400. My entry candle or time frame, the hourly, let's have a look. Those highs are at 8400. We see price trading at them, and then we see price moving lower from those areas. And in doing so, the relative strength went from a very high to a very low. See that RSI started to fall off, and this previous attempt here of the prior one is trading higher, so that's a positive sign, and sure enough it is, because we're trading above the institution moving average now. And now we're going to see price finding support and then bouncing higher, so roughly around the 8280 mark. We want to see price now finding support around this area above the institution moving average. Everything's in our favor. Blue, 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 blue. All the moving averages below price. Everything's looking favorable upside. As long as it maintains itself above the 50 period moving average, 50% line here on the RSI, telling us that this trend direction the sentiment is bullish. Now we want to see price kick on from 8280 now. It gets below 8280 and RSI breaks below the 50 again, then it's negative sentiment, indecisive sentiment, and we haven't broken a prior high, so it just won't look good for this. Okay, and this area here at 8330 is the 23.6 on our small time frames. Got to be trading above that in order to see the 84 being tested. The more we spend below this 8300 here psychologically, the more likely we're going to see price consolidating and failing, and then eventually just falling lower. That's it, guys. That's a wrap for what I think is going to happen for the foreseeable week. Please ensure that you put all these lines of major support and resistance in, and engage what price has been doing relative to those major support and resistance levels to get you an idea of what price action is likely to do for the remainder of the week. We don't want to be trading negative sentiment. We want to be trading sentiment with genuine movement behind it. So look for those ones, look for those setups and trade those setups. If not, stand aside, wait for those confirmation, and once you get a genuine confirmation, trade the confirmation. Don't ever second guess the market. So hope you have a fantastic day today. There's a lot of news out this week. Just make sure that, or be aware that of these news events. Today in particular, what did we have? We had Australian approval month-on-month building figures, very, very negative. So if you're trading the yen, the Aussie dollar, that wouldn't have really factored all that well in terms of building approvals month-on-month. You want to see those becoming, you want to see a better figure, which tells you that there is definitely money circulating out there. What do we have for the European session? Well, we have Swiss franc retail sales year-on-year figures, expecting a lower figure. We weren't expecting anything fantastic from that. 9:30 a.m. GMT this morning, we have manufacturing figures, PMI results for sterling. That's going to be quite an interesting one. They're expecting a forecast less than the previous figure was 51.2. They're expecting 50.6. Comes any lower than that, well, that's just confirmed that things just aren't. There is no expansion in sterling on the market. 10 a.m. GMT this morning, the European unemployment rates. Previous figure was 10.7%. They're expecting 10.8. Comes out any lower than, well, higher than that, well, it'll just confirm. That'll just be priced into price action. Then we move into the Euro session this afternoon at 3 p.m. GMT. We have the IMS manufacturing PMI. Here we're expecting a slight raise. Previous was 52.4. We're expecting 53.3. So if it comes out higher than the forecast, it'll be fantastic. If it comes out lower than that, but still higher than the previous, then it'll still be good. So just be aware of all these news announcements and see how they will relate in order to play as price is trading at the moment now. Other than that, just have a fantastic day. Keep everything simple, as I mentioned. Wait for those setups to present themselves and trade them. Make sure that you have sentiment in your favor if it's genuine. We're seeing a lot of indecision recently. We are seeing topside moves. We are seeing price break or testing or just breaching very strong support and resistance levels. Let's see those pairs maintain those levels. Okay, once they do, then it's just confirming that everything is genuine, and then we buy into genuine sentiment. Other than that, stand aside. Get that sentiment in our favor, then we should be looking for trading opportunities. If not, stand aside. And then I'll see you first thing tomorrow morning. Until then, trade serenely.